Hey traders, welcome back to another holiday shortened week of trading. This is our weekly trading preview and market analyses for the week of January the 17th. Starting it off on a Tuesday here. So we've had an absolutely just gangbuster start to the year. We want to obviously try to keep that momentum going, and part of that is understanding sort of where we're at in the marketplace, and that can kind of help us structure our trades going forward from a support resistance standpoint. So a couple of things that we want to look at. One of the things that we always start our analyses with is the weekly picture of where we're at technically. We use about 12 different technical indicators with the dual overlay of anything from a 5 all the way up to a 200-day moving average. We look at pivot points. Pivot points are a key area, but the real key thing is that even though it does look like it's a little bit long in the tooth, we are still in a buy mode in this marketplace, and we're going to take a look at that here technically and kind of see how that plays out. We're down about 10 points right now on the futures market prior to the cash open here on Tuesday, but this has been a nice little trend to the upside, and it's been, I think, fairly healthy in that regards as well. However, you can see that this nice little trend that we have had here really going back to the first of the year, January 1st to January 2nd, as we kicked off the year. It's been a nice little upward trend, but we are hitting a pretty hard and fast delineation point resistance area. You can see that the overall trend still going back, obviously, a year in time is still down, although we are pushing to the upside right now, and pretty much all of our technical indicators, as I mentioned previously, are in the buy mode. But it'll be interesting to see how this particular week works out. We're again hitting up against some substantive resistance levels. We are up above the point of control. We're up above VWAP. This black line right here, I refer to that as the cliff. We're up above the cliff right now. So it'll be interesting to see how this works itself out this week. But I do think that we are sort of getting to that point volatility-wise where we're going to be looking to break out, either up above this pretty, again, substantive resistance level or back down below what I call the cliff. So we'll take a look at these levels a little bit more in depth here. This is a 2-hour candlestick chart, and this is generally what we use as we get started on the day, is a 2-hour chart to give us a little bit of an idea of where we're at. This 38.40 level, again, this is sort of the level that I refer to as the cliff. That's sort of our downside level, and then really this 41 level up here would be the upside resistance level. So that's sort of the box or the zone, if you will, that we're trading inside right now. And again, it does look like if you pull up sort of a volume profile analysis, we are sort of getting a little tired here, and that the market might potentially be looking for a little bit of a rest or a retracement. However, this bullish move, again, sort of starting at the first of the year around January 1st, January 2nd, has really been a fairly healthy upward trend. And so, we like to see moves that are solid and not erratic. Gaps generally will refill themselves. It's been a fairly healthy move to the upside. Again, we'll have to see how that sort of works out for the next couple of days. We have some news that could be a driver for us this week. If we look at the overall indices, we trade each one of these individual strategies. We trade the SPY, the Q together as a 4-day to expiration strategy, and we sort of play one off of the other, scaling into different sides of those trades at different times. And that tends to work out fairly well. We had to basically reset this trade last week but it ended up working okay for us. So, so far so good on the year with our SPY and Q4 date expiration trade setups. Same thing with our IWM trade. We were able to sort of do a little bit of a double dip last week on our IWM trade. That's worked out quite well for us, obviously, last year with not a single loss in that strategy. And we're off to a good start this year as well. You can see that it is the diamonds that have absolutely sort of just ignored the fact that we've been in a bear market over the last year. The industrials have been pretty strong. And we've continued to, we work a ladder trade with the DIAs. Been able to stay ahead of those moves, even though it has been sort of a challenge each and every week. But so far so good with our DIA trades. We haven't booked a single solitary loss in that category as of yet. And we'll be working some more trades in that category this week also. A lot of stuff planned for this week, even though it is a shortened week. We look at these key support resistance areas, and again, this is sort of what we're talking about, that although we've had a nice little run here to start off the new year, we are up against some substantive sort of longer term overhang or resistance, and it will be interesting, I think, today as we are pushing on that to see if we can continue to push higher or if we do take a pause. My feeling here is that we are going to take a little bit of a pause today. At least that's how I'm going to start off the day, playing our 0 day to expiration SPX starting trade on the day. We'll see how that develops, of course, as the day goes on. We look at earnings. There's actually, we're back into earnings seasons again. It was the bank stocks that kicked that off. We've got bank stocks again reporting today. But I will just say that while we're back into earnings season, there's not really a lot that I am looking at earnings-wise this week, save for Netflix on Thursday after the bell. So that will be a trade that you'll see the results of on Friday. But we do have a position in Netflix, both in our ATM passive investing program, as well as in our live trading room. And so we will most likely be pulling those trades on Thursday in preparation for that. That's the one earnings trade that we're really keeping an eye on this week. We look at the sector rotation, and the last week again was a good solid week for the market, but I think that the one that was the most interesting to me and has been for the last couple of weeks is real estate. You're starting to see really some substantive strength come back into the real estate sector. I have to admit, it's a little surprising to me how strong it has been. I don't know if we're necessarily this week looking to put on some long positions there, but it's interesting that I think real estate, consumer discretionary, of course, that's been strong for quite a while now. So we'll have to keep an eye on that as we're going forward here. I do also have an eye on the financials. We do have banks that are still reporting, started reporting the end of last week, and they're still reporting this week. So keep an eye on the bank stocks as well. If we look at sort of a heat map, which is that 30,000 foot view of the marketplace, this is 2 weeks ago right here, and then this is last week. And so you can kind of see visually what I've been talking about here, which is that we're starting to get a little bit tired here in the marketplace. It's nothing really substantive here, but we are starting to get a little bit more of a mix of on our advanced decline line. And again, I think that we may potentially be in for a little bit of a pause here as we start this shortened trading week. We look at the results, and again, anytime, this is 2 weeks ago, anytime that you do have strength like that, it does really sort of lend itself to needing a pause. It also, I think, is reflective of how important it is, and I stress this over and over again with our trading members in our trading room, how critical it is to trade all 4 of our strategies. We trade the SPY and the Q. That's really together as one strategy. We trade the IWM in a different approach. We trade the diamonds in a different approach. It is important, I think, from a diversification standpoint to trade all of those, because you can see, there's quite a dichotomy there between how the indices do perform on a week in and week out basis. We look at the put-call ratio. The put-call ratio, when it's above 1, that's when put volume exceeds call volume. When it's below 1, that's when call volume is bigger than put volume. And it's just a way to gauge market sentiment and see, if we have an extreme sort of situation, whether it's bearish or bullish in the marketplace. You can see that really on the NYSE put-call ratio, pretty much neutral right now. There's not a lot of signals right now in the marketplace that are flashing, whether that be bullish or bearish. We look at the expected move for the week. It is a shortened week, so this is a little bit of a misnomer here. It's not as bad as it looks because, again, we are on a shortened week here. But volatility is shrinking, and it has shrunk quite a bit from where we've been last year. Mentioned this in our live Zoom feed, I believe on Friday of last week, that our ability, maybe not our desire, but our ability to be able to roll 0 DTE trades as a way to fix one that is not working, that's kind of dried up for us so far this year. And unless we can get back up to the 120 plus point move potential weeks, I don't know that we're going to get that back again. And so we will, in all likelihood, probably see more losers. I think, last year we came in at about 97%, roughly right in that range, 97% success rate on our 0 DTE trades. It's probably going to be lower this year because we will lack that ability to roll and adjust a trade in that manner. We can still obviously adjust them, but just not in a roll fashion. So be aware of that. Again, it's neither good nor bad. It just simply is something that's important for us to take note of so that we understand how to approach our trades. One thing also that's interesting is the fear-greed sentiment reading. Again, it's sort of a contrarian indicator. It looks at momentum in the marketplace and strength and breadth and the put-call ratio that we just looked at, market volatility, all that kind of stuff. And again, it's sort of a contrarian indicator. When you have extreme greed, you should probably be selling. When you have extreme fear, you should probably be buying. We haven't been in this category for quite a while. And so again, maybe for the first time in a little bit here, we're starting to get maybe a little bit of a swing too much to the buy side, to the greed side. Again, it might pretend that we have not necessarily a pullback here, but a little bit of a pause as we get started on the week. Now, open interest levels, this is always important for us. These are the areas where we have the most volume, the most activity at certain strike prices. They do tend to act as a magnet and act as a wall, a gamma wall, as we're moving in and out of those areas. And I think it's pretty clear and obvious to everybody where the big open interest activity is. It's really around that 4,000 level. We're sitting right now, we're down about 7 points on the E-mini right now, sitting at 4,011. And you can see we're sitting right on top of that huge open interest level. 4,100 would be the level that I would be looking at above that, and 3,950 would be the level that I would be looking below that at. So really, I think for me, we've got to do something to break either below 3,950 or above 4,100. And that would sort of portend the next potential move if we could, in fact, do that. We look at the S&P volume, and again, I think this is maybe one of the factors as to why we don't have as big of an expected move as we would like to see in the marketplace. Just still not really building a lot of volume. It's not horrible, but it's not great either in terms of volume and activity in the marketplace. We look at some potential catalysts, market moving news catalysts for the week. We do have CPI for Canada coming out here today. That's in about an hour from now as I record this. Wednesday, we've got the Eurozone CPI number coming out, retail sales in the U.S., PPI numbers, industrial production, and we got a fair amount of, I think we've got 4 maybe Fed speakers, all speaking not simultaneously, but one after another on Wednesday. So those could all lead to some volatility or catalysts in the marketplace to push us up or down. Thursday, we have jobless claims once again. We have housing starts, and then we have nat gas numbers and crude oil inventory numbers. Usually get those out, crude oil on Wednesdays, but because of the shortened holiday week, it's coming out on Thursday. These are both going to be huge for us on Thursday because we do have a fairly substantive position in our model portfolio with regards to nat gas and crude oil, and we do anticipate that we will be adding to those. And if everything works out as planned, again, depending on price action, we might do it either today, Tuesday, or tomorrow, which would be Wednesday. But ideally, we'd love to be able to hold off until Thursday, get those supply inventory numbers out, and maybe that gives us a little bit more transparency. Friday, we have existing home sales coming out as well. Again, real estate has been on fire as of late, and it'll be interesting to see what that does with regards to those numbers. We look at our updated performance results for 2023. We're only a couple weeks in, but we've had 9 days of 0 date expiration opportunities. We've done 13 total trades. That's just indicative of the fact that we double dip on certain days when we have the opportunity. We don't always have that opportunity, but we've certainly had a few this year. All 13 of them so far have been winners. We haven't had any losers. That's a 100% win rate. If you're challenged with math like I am, so far so good on our ZRDTs. It's been a pretty impressive start to the year. We look at our 4-date expiration trades. Those have worked well also, although they've needed quite a bit of work to get us there. Our IWM 4-date expiration strangles have been solid as well. Obviously, we've only had 2 weeks, but we did double dip on one of the weeks. So 3 total trades, 3 total winners so far there. No pairs trades yet this year. No new bear market trades. We are doing a 4-date expiration equity strangle. We did it pretty much all year last year on PayPal, and this year we're using Netflix at the moment. This is a more strategy-based trade than it is the underlying based. So we may very well change ticker symbols as the year goes by, but right now we're using Netflix. And again, that's why I mentioned that's the main earnings result that we're looking for this week, because we're going to probably want to pull that position on Thursday prior to them reporting after the markets close. But so far, so good on that trade. It's been a really, really high ROI trade. We've done 3 trades with all of them being winners so far. But the big thing is the ROI on that trade has been really, really solid. Our positive Vega DIA trades, we've only done 1 so far this year. We'll be working on that again this week, adding to our DIA trade ladder. That's been a good trade for us as well. Although the diamonds have been pushing up, we've been able to stay with it fairly consistently. Scalping this past week, we did scalp on Thursday. I was scalping the MES. And so I made a $300 profit. That's 1/10 the size of the E-mini because I had a long E-mini already in the model portfolio. But those members that were scalping the E-mini, it was a really, really good day. $3,000 profit day on scalping. Dragonflies, no new dragonflies for this year. Theta Fairies, we've had 9 total Theta Fairies this year. 8 have been winners. 1 was a loser. We've got 1 working right now. And we're just a little bit of ways away from hitting. This is a trade that I got into at $5.75. Got an exit price at $3.50, and we're trading at $3.90 right now. So getting very, very close to booking another really nice solid profit on our Theta Fairy trade. It's always nice to wake up to an extra $100 under your pillow before we even really get started in the trading room. One gold ladder so far this year, and those have worked out fine for us. Again, it's obviously a little early in the year to even be talking, but we got to start somewhere. Our oil ladders, we've done 2 oil ladders. Both of those have been winners so far this year. We're quickly ramping up to our first official overnight vampire trade. I did one last month as an example to the group, but we're going to do one officially here as we go forward to the group. If you're not familiar with the overnight vampire trade, you can check out the YouTube channel here. There's a little bit of an explanation of it, but very exciting trade, and I'm excited to bring that to the group overall. And then last but not least, of course, is our asymmetric trading method. We affectionately call it the ATM, passive investing approach. What can you say? 2021, we absolutely crushed the market. Last year, 2022, we outperformed the market by an even greater margin. Just an absolutely fantastic result. If you're interested in investing and something that's passive in nature and something that just takes 5 minutes a day to make a couple quick little portfolio adjustments and then you're done, the ATM program might be a good fit for you. So anyway, we're off to a great start so far this year. If you are interested in being a part of our 0 DTE trades that we do every single day, as well as probably 15 or so different other disparate trades that we do inside of what I feel like is the highest value oriented trading room online today, you can go to try0dteforfree.com and come trade with us. Come hang out with us and talk with us for 7 days for free. If you do want to look at more a passive investing approach, you can go to tryastforfree.com. And again, our goal there are better returns than the S&P 500 with less risk, less volatility. It's been an absolutely just amazing performance out of that over the last few years. And then finally, if you do want to come scalp with us, I can't guarantee you that every scalping session that we have is going to be $3,000 of profit, but we do shoot for $500 to $1,000 a day in profit potential. And then it's just up to you and I as traders to execute that and see whether or not we can accomplish it. We do live scalping every Tuesday and Thursday. If you want to come join us for scalping, you can go to tryscalpingnow.com. Thanks, guys. We will see you in the trading room here very shortly.